Hi there, welcome to GrainTV. It's Wednesday, December 2nd. We had another mixed day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was off 3.5 cents a bushel, while beans continued its winning streak, advancing 3 cents on the day, and wheat continuing to be the dog that just won't hunt, off another 4 cents today. The wheat market continues to get beat down as we have this delivery issue with Chicago, and overall just a continued barrage of bad news. Although there are some silver linings on the horizon with a lower Australia crop, problems in the Ukraine. So right now the market's choosing to focus on only the bearish side of this equation. But we need to find a bottom here to see this market turn around. Let's take a look at corn, where we had an off day in corn after yesterday's strong advance. We are in sort of this downtrend line that's really started since the 1st of October. And what I want to focus on is sort of where we're at today. We closed off of that trend line quite a bit, but I'm still expecting us to sort of make a challenge at this trend line. If we can close above that trend line around that 374, 375 mark, basis against the March futures, then I think that's a very good sign that we'll start to continue to move higher in the marketplace. We've been inching our way up over the last 2 weeks, and that's been positive, but we really need to see a breakout here to get this market sort of accelerating to the upside, much like beans has been doing over the last week and a half. In terms of markets, let's talk a little bit about basis. And as we talked about last week, with the bean market starting to rally, we talked about that key reversal last Monday, and that was a good sign of a potential bottom, and it's turned out to be true. But what's problematic is as the futures rally, we get more and more farmers selling, and we're seeing that weakness in basis. Take a look at these numbers for end user basis levels. 50%, one half of the corn ethanol plants are off 5 cents or more in the last week. And in soybeans, 22%, nearly 1/4 out of every soybean crushing plant is off 5 cents or more in this past week. So as this market has climbed, we are seeing the basis come off. And that's not surprising, because we do have plenty of stocks out there. The short covering rally is driving the futures market, especially in the case of soybeans. That's helping move the futures higher, but the basis is coming off almost as much. So farmers really pay attention to managing futures versus managing basis. If you really want to find your best cash markets in your local area, really the best place to do that is at GeoGrain. Go there today, geograin.com, and sign up for that free trial. Now let's talk about how do you manage the futures side of this. Let's suppose you're actually going to sell cash grain. What can you do to capture that rise in the futures market? And I'm going to take a look at a soybean trade here that we've been talking to clients about in the last few days, and that is buying a March call for a March bean call for $9 and selling simultaneously a 940 call. What this strategy is a limited risk trade that gives you 40 cents of upside potential. The difference between the $9 call you buy and the 940 call you sell. The beauty of this trade is that instead of just paying outright for the $9 call at 22 cents, you're actually going to get to keep the 9.5 cents as a credit. So the net premium, the net out of pocket, only turns out to be 12.5 cents. So for 12.5 cents of premium, you're able to capture a potential 40-cent rally. So that's what we've been talking to our clients about as a way to capture this rally. We talked yesterday on GrainTV about 924 being the upside, or at least a point of the top here in the recent activity. So we're looking for that 924 mark as a potential point to see this rally carry up to. If we can get this net premium, or this strategy at a net premium of 12.5 cents, maybe ride that net premium up in value up to a 25 to 30 cent appreciate, or 25 to 30 cent value, and then take that money off the table. This is a market that's not going to run away on us. It's not going to carry substantially higher, but we do want to be able to capture some of these rallies, in this case a short covering rally that can help our bottom line. If you've got questions about this trade or want to talk about your own marketing situation, give us a call, 877-472-4607, and by all means visit us online at grainhedge.com to see how you can become a client of us. Thanks a lot and have a great day.